South Korea's retail investors are reshaping the U.S. stock market. A remarkable shift is taking place. Ordinary Korean investors are influencing the U.S. stock market in unprecedented ways. Picture this: an ant army of Korean retail traders has nearly doubled its investments in U.S. stocks over the past year, reaching a staggering $170 billion. To put that in perspective, that amount surpasses the sovereign wealth funds of many countries and is enough to buy Iceland's entire annual economic output. Their impact on specific stocks is even more striking. For instance, Korean retail traders now hold nearly 20% of IonQ, a quantum computing company, with positions totaling $4.4 billion. Thanks to their enthusiastic buying, IonQ stock surged over 300% between March and October this year. Then there's Beyond Meat. Last month alone, Korean net purchases reached $244 million, sending the stock on a wild roller coaster ride within weeks. This frenzy has caught the attention of Wall Street professionals. One seasoned fund manager noted that the U.S. market is showing signs of Koreization, where traditional fundamental analysis seems to lose its relevance when these stocks move. So what makes Korean retail investors different? First, they're fearless with leverage. While U.S. retail traders typically use around 1.5x leverage, Korean investors often deploy 3-5x leverage. That means bigger positions and bigger risks with the same capital. They're also diving into complex derivatives. For example, Korean retail traders account for 1 out of every $5 flowing into a popular double-leveraged volatility product. Let's be clear, due to its structural design, this product almost guarantees losses over the long term. Yet, many see it as a way to profit quickly during market swings. Technology has made all of this possible. South Korea's fully automated trading systems allow investors to execute forex, monitor markets, and copy trades with a single click. No wonder one trader remarked that trading has become as addictive as gaming. But the deeper question remains: why are so many Koreans taking such big risks in a distant stock market? The answer lies in Korea's socio-economic reality. Seoul's housing prices are among the highest in the world. It would take the average salaried worker 18.5 years of savings, without spending a dime, to afford a home. Faced with this harsh outlook, many see U.S. stocks as their last shot at upward mobility. At the same time, the local stock market has been disappointing. Over the past decade, the main Korean index delivered only about 5% annual returns. When you factor in the Korean won's depreciation against the dollar, U.S. stock returns converted back to one look far more attractive. Making matters worse, the Korean government's proposed stock market reforms earlier this year saw tepid results. Less than 4% of listed companies responded positively. As a result, more disillusioned local investors are turning to U.S. markets, and the effects of this shift are already being felt.